Hey everyone, and welcome to another episode of Crypto Marketing Insights with me, your host, Yasha Harari. I want to just get into things real quick today and talk to you about crypto marketing and its impact on the blockchain. Of course, this is not a financial advice show, and I'm not a financial advisor, and do your own research and all that kind of stuff. I don't even talk about financial advice. I really talk about just marketing. So, if you're into that, you're here. If not, you're not. Um, Obviously, market yesterday took a little bit of a profit taking, quite natural after nice 2 day spike in the prices overall, and XRP a little bit of a late comer to the party. Actually had a little bit of jump yesterday compared to the other coins, although it did go up. I mean, it's just what happened is it dipped a little earlier, as did Ethereum. Very much, they had a very similar pattern. You can see there. All that, whatever, the coins are up. Basically, it's been a nice week for a lot of coins. Overall, there's some ups, some downs. Sure, as always, it's a mixed market. There's thousands of coins on there. Some of them are still spiking nicely. There's PunDX right there, 22% Maximine coin again. There you go, 9 cents now. Had a 65% jump yesterday after obviously a massive dump that happened a few days ago. But that's quite a big spike they had yesterday. And there's just a lot of winners, a lot of losers, as always in the mixed market. But overall, this is not a bad red day. All the red you see here are pretty light for the most part, and it's mostly profit taking. Dogecoin down 9%, which is interesting because they just had their news about Elon Musk announcing, obviously for fun or whatever on Twitter, that he was the new CEO of Dogecoin, because Dogecoin ran some kind of survey asking, who should be the next CEO, and he got the most votes. So he, in good fun and in good spirits, acknowledged it and had a laugh, and at the same time, Huobi, the exchange, started trading Dogecoin. And so on the news of Elon Musk and everything else, we saw basically some nice growth for Doge this week. The Doge is now 0.003545 cents, or dollars, sorry. So it's pretty cheap. If you're looking to buy some Doge just for fun, there you go. You can always get some Doge just for fun. I mean, there's only 118 billion of them. It's not like you're going to run out anytime soon. There's definitely more than one per person on the planet. They don't have that Bitcoin issue, right? So if you want to get some Dogecoin just for fun and have an actual Doge for very cheap, this is not financial advice. But just as a collector's item in the future, one day you'll look back and maybe you'll sell that crypto to a crypto collector in the future who will buy old, original, but useless cryptos, like the same way people buy old, original, and totally useless coins now. Usually the only value old coins have is the actual metal they're made of or some historical significance, right? So yeah, same thing. If you want to be a crypto collector and buy something that might be worth something hanging on your wall someday, because you can't hang a crypto on your wall, so maybe you'd hang the ledger it sits on. No, it doesn't. Whatever wallet you keep your Doge on, you might hang that crypto wallet on your wall someday and show people that you once too owned Dogecoin back when it was a thing. It still is a thing. It's still rising. It's still awesome in so many ridiculous ways as the meme of crypto, the meme coin, if you will, inspired by a meme of a dog. And yeah, so I mean, whatever, just for fun. But here, listen, there was an interesting article that did come out. Okay, so enough of looking at the markets. We all know everybody went up. I hope you guys all made money, whatever, yay. If you didn't, well, there's always tomorrow or today. But I don't talk about anything like what you have to buy into or stuff like that. No, I'm looking at, this is interesting. Interesting news for the blockchain, right? Research article on Cointelegraph says that Bitcoin could beat MasterCard, could beat Visa, MasterCard to top the world payment systems in 10 years. Right? We know that for the second year in a row now, okay, Bitcoin has actually beat PayPal. in terms of transaction volumes over the year, right? The last year was the second year in a row, 2018. The Bitcoin outpaced PayPal in terms of overwhelming or overall volume of transactions. Well, it's likely to happen again, right? And we're likely to see Bitcoin keep growing as we enter the next 4-year cycle. If anybody of you is familiar or not familiar with this analyst, Bob Loukas, Loukas, Bob Loukas, look him up on YouTube. Very interesting guy. If you're looking for technical analysis and everything else, he explains quite neatly about this 4-year cycle idea. Well, the 4-year cycle idea doesn't, and the 16-year cycle idea as well, by the way, and where Bitcoin will or won't be in the next, but at the end of its first 16-year cycle and everything else. From a marketing perspective, right, if Bitcoin hits $100,000 roughly, it could be 100 grand, it could be 80 grand, it could be 250 grand, I don't know. Whatever it hit, when it gets to roughly the 6 digits, okay, it may be at the end of like 4 years from now, roughly, like October, what are we in now, 2019? So at the end of 3 years of up and then another year of down, roughly. So 3 years from now, 2022. So October 2022, roughly, is apparently when we'll see the next highs, like all-time highs of Bitcoin. And when I say all-time highs, I mean the end of the next hyperbolic run is estimated to be around October 22, which gives you plenty of time to do lots of accumulation between now and then, especially if you remember that in the last, the last bull run, all that crazy accumulation from 5,000 to 20,000, all that crazy price increase from 5,000 to 20,000 happened in like 5 weeks. And prior to that, the increase, the bull run had still been going on for a year and something before, but businesses were not exploiting that opportunity in terms of their marketing. They were just sitting flat on rising Bitcoin, and many of them were actually decoupling from Bitcoin in terms of stopping to offer Bitcoin as a payment solution while the price of Bitcoin was going up, right? There were plenty of sites that got very excited in around 2011, 12, 13. Well, 2011 is bitter, but a lot of sites got very excited around 2012, 13, and 14, and they started accepting Bitcoin, right? Around then. And then by 2015, when, prices hadn't yet fully gone up, and in fact had come down quite a bit from $1,000 to like a couple $100. Okay, everybody thought, oh, this Bitcoin thing is dying. Not everybody, but a lot of people thought this Bitcoin thing is dying. And surprisingly, a lot of sites that had been running Bitcoin as an alternative payment solution for a few years stopped accepting it, right? Even big sites, even big commercial sites. I know for a fact that Fiverr used to accept Bitcoin and doesn't anymore. For whatever reason, they don't use that solution or something for allowing customers to buy there anymore. Because I don't know why, but I guess it's the volatility of the coin, right? Just to be clear, I used to work there in the company, so yeah, I know that they used to work. They used to accept Bitcoin, and they don't anymore. Will they again? I don't know. Maybe. Will other companies accept Bitcoin? For sure. There are already companies, and a growing number of them. But it is interesting that during the last bull run phase, right, more and more companies were dropping Bitcoin as well. Like we were starting to see actual cancellation, right, of Bitcoin services by merchants, which is weird when it's such a new asset. But I guess it was too new for them, and they wanted to wait and see if it could be, bigger and better by the time they would use. A lot of merchants who canceled did that for that reason. And it's also important to remember that as Bitcoin ages, right, it has more experience, it has more credibility, it has more proof that it works. Well, it's less and less likely that people will just willy-nilly cancel offering it. Especially during this coming bull run, I think, because businesses will see that, hang on, in the last bull run, it spiked like, many multiples from hundreds of dollars up to 20,000. And if you say, okay, well, it went from, if you consider that the breakout was 1,000 or 5,000 and then it went up to 20, fine, whatever. The point is it still went up from, depending on when you look at your charts, it went from nothing to 20 grand over 10 years, and it went up from, up and down and up and down. It went up from under, from a few $100 basically to 20 grand in a couple of years' time. So you could easily do that again, going from where it is now around 5 grand to 100 grand again, if the number of people getting into the market remains proportionally on the same, acceleration chart or velocity chart as it did during the last cycle. Because in order to support the higher value, obviously you need more people buying. So if you have the same number of people buying as last time at the same prices, well, in the same quantities, roughly you're going to have the same prices, right? But if you have 5 times as many people buying next time, the price could easily go up 5 times, right? And especially if they see the value going up more, people might buy more of it just because they want to buy as much as they can. That's a psychology thing, which is ironic. You'd think those people would want to buy them now or 2 months or 3 months ago when it was its cheapest in the last year's bear cycle. But no, the psychology is that people are going to want to wait to use this stuff both as merchants and as consumers and as retail investors. They're going to want to wait to get into this when it's essentially its most expensive, thinking that they're going to go Lambo somehow by getting in when it's at the higher value. And that happens. People FOMO into stuff all the time. Even smart investors FOMO in all the time. They accidentally buy into something by looking at the charts wrong or something. I don't know what. It happens to everyone. The best of the traders have made that mistake probably at least once in their life, if not more. So that's natural. But from the marketing angle again, when we look at these cycles, we have to think to ourselves, okay, so we know that we can essentially depend on these quadrennial cycles to influence assets like digital currencies. And these quadrennial cycles serve many interesting purposes, and also their timing tends to be, I wouldn't say prescient, but their timing seems to be there's a certain rhythm to a 4-year cycle, okay? A 200-week moving graph. 4 years is, for example, it impacts all kinds of things in many countries, from presidential cycles, electoral cycles, Olympic cycles. There's a lot of things, right, that occur on quadrennial cycles. And interestingly enough, like halvenings and all this stuff, interestingly enough, Bitcoin is built in a way and was released at such a time that it keeps running into these interesting random coincidences with other things and events happening around the world, right? Timing, cultural events, political events, business events, whatever you want to call it. There's a lot of interesting pure coincidences that are happening that are very much tied to the fact that Bitcoin in itself has a built-in mechanism for controlling things like the use of the power, the hash power, by controlling the difficulty of the hash, etc. So if you control the mining difficulty at your very core just by being able to adjust, right, that thing, and you kind of built in this system that lends itself to a quadrennial cycle, right? And it isn't a given that Bitcoin is on a quadrennial cycle, and we're still in the very early days of Bitcoin relatively to what it theoretically could live to be. In theory, if it lives 100 years, which is a very long time for any currency, but in theory, if Bitcoin were to live 100 years, then 10 years is still early. 20 years is, just out of adolescence, right? A young adult, right? 10 years ago, barely anybody knew what Bitcoin was, right? I was very lucky to know what it was, or not lucky. I was very early to know what it was. 10 years later, 10 years on, here we are. Millions and millions and millions of people around the world know what Bitcoin is, and several million even own some, right? According to research. 10 years from now, where will Bitcoin be? Will everyone be using it as a global payment solution? Well, according to the statistics, it does appear that we are en route to essentially overtake the number of transactions that per year, that in terms of value, that Visa and MasterCard perform every year or produce every year. When I say we, I mean I speak as the greater community of Bitcoin holders, people into crypto and stuff. But yeah, it is interesting. We could see that. And what that means for merchants is they need solutions like Lightning Network and others, right, that are faster than 7 transactions per second, obviously, right? But with those solutions, and I know it's not perfect centralization once you add a second layer and all that stuff, but let me express to you that doesn't really matter. That really is not the end of the world for most people in most cases, okay? You go to the grocery store with your Lightning Network wallet and your Bitcoin wallet, and you move some of your, or not the grocery store, maybe you do that online, but you go to whatever store, online or offline, and you want to make a purchase, and you want it to be done quickly. If you're offline and you're at a store physically, and all you have with you is your phone with you, and you have your Lightning wallet in there, and you've already funded it with some Satoshis, right, out of your Bitcoin wallet, well, then you're going to see that transaction go through incredibly quickly, like on the spot, right? And faster, if not, I think even faster than Visa or MasterCard. Because Visa and MasterCard, remember, if you're a merchant, you don't actually collect that money on the spot, right? You just run the card, and all the card does is make sure that the consumer has the money in that card, has the available funds in that card at the time of purchase, that you can write it down, essentially using your little point of sale machine. It can jot it down, print out a receipt that the money's been received, but it hasn't really been received. All that's been received is a kind of an IOU that says from the buyer to the merchant, I owe you this amount of money on my credit card, and the merchant gets verification that that consumer has the money, and at the end of the day, or whatever their batch period is, they send a batch of orders. It's called a batch, right? Send a batch of orders to Visa or MasterCard or whoever's processing their money, and they then resolve the purchase. The transaction only gets resolved hours, or sometimes the next day, even later in some cases. It really depends when the merchant runs their batch order. So generally speaking, Visa and MasterCard are really not faster than Bitcoin. I mean, they're just not. You don't get your money instantly on Visa or MasterCard if you're a merchant. You just don't. Unless you're running batch orders with every single order, and then the fees are going to be much more exorbitant, and nobody does that if they're a real merchant. So to say that Bitcoin is slower than Visa or MasterCard is already a lie. And I don't want to call it an accidental mistruth or something. I want to call it what it is outright, because it is in marketing. It's a blatant lie, right? To call Bitcoin slower than Visa and MasterCard. Yes, in theory, Visa can handle 24,000 transactions per second. That's true, but they're not really doing that. Right? They're handling batch transactions at the end of the business day in any given time zone, and that's how they do their processing. So they have certain key areas per time zone, and there's other things that they break it down by, but definitely per time zone, where they know they need to have certain amounts of computing power to handle a certain amount of transactions on any given day. And throughout the year, that amount changes given the day of the year. For example, it's a lot easier to run a transaction if you buy it, let's say, if you run it on April 5th, which has no particular amazing, huge cultural significance other than Okay, it's Satoshi's birthday, and it's also the date that gold was determined to be no longer an asset that would back the dollar. So there you go. It's those two interesting holidays. So happy birthday, Satoshi, by the way, Satoshi Nakamoto. And happy confiscation day, gold. I don't know how that works. Happy non-being tied to the dollar day. Anyway, the point is, April 5th has no really particularly huge cultural significance. It's not like Christmas or something, right? Today's just like a regular day in the market, a Friday or whatever. You know, or pick any normal day of the week, any normal day of the month, any normal day of the year. Transactions are going to be at their default amount. But then you're going to have surge days, you know, and the run up to Thanksgiving, and the run up to Christmas, and the run up to whatever holiday where you're going to be buying a lot of stuff for people. Those surge days will require more computing power by Visa and MasterCard. Well, they'll also require more computing power by Bitcoin and other things, other cryptos. But the question is this bad for business or good for business that there'll be a new payment system that everyone now needs to deal with? Now we need to also add on Bitcoin to everything else. Okay, so yeah, if you're frustrated by having to add another machine to accept another payment solution, then what can I tell you? You don't like money? No problem. You know, open up a different business or don't accept Bitcoin and be left out in the cold in 10 years when everyone is accepting Bitcoin. And, you know, fewer and fewer people even have Visa or MasterCard or even remember what that was, let alone walk around with that filthy fiat currency. Yeah. Which, by the way, I still love. It's all good, you know. Money's money, as long as it pays the bills, and it's just a medium. It's like paper or water, really. It's a thing. Some people need it, you know. Some people need more to do with, and some people need less to do with. And depending on your business and your needs, you might not need as much to run a successful business as other businesses, right? But crypto may still become this global payment solution. And when you keep in mind that there's only 21 million of them in theory that can be made, never mind the debatable part, it has strong value if it will become a payment solution. There's 21 million. It doesn't mean there's only 21 million people who will ever have any Bitcoin. Because remember, they're not going to be using whole Bitcoins, right, in 10 years. Pretty much no one is going to be walking around with a whole Bitcoin in their wallet in 10 years. And if they are, they're probably really wealthy. Because in 10 years, if Bitcoin runs up to 100 grand, 250 grand, $1 million, how often do you walk around with $1 million in your wallet? No, you're going to be walking around with Satoshis in your wallet. That's what you're going to be walking around with. You know, people. I've said it before and said it again. People have to stop thinking about. It's good for those of us who are in the business to be into Bitcoin and getting as much Bitcoin as possible. But bear in mind, most people will never own a whole Bitcoin. Right? Most people have no chance of ever owning. In fact, most people, if you were to just take all of the Bitcoin in the world, you know, it's a tiny amount, 21 million. Even if you somehow found the missing 4 or 5 million that have basically disappeared or have become inactive or unavailable, you still could not give them to more than even 1% of the world. Right? It's not possible. But Satoshis, that's where the money is. Right? That's what makes up a Bitcoin. 100 million Satoshis equals 1 Bitcoin. That's where you're actually going to have distribution. Right? It's the same thing. A Satoshi is part of a Bitcoin. But it's a psychological concept. Those who are thinking in Bitcoins, and that's great because you're in it now. Those of us who are thinking about Bitcoins are very fortunate. We still have the ability to get a Bitcoin. Right? Not everybody, I understand that, but those of us who want one right now, who work really hard for it or have that money or whatever, you know, you could get 5 grand somehow, maybe you can't. You know, but if it was your investment goal for the year or something, typically investors, you know, are spending thousands of dollars in a year on their, or not spending, they're investing thousands of dollars in a year on their investment. So it's not like completely out of reach yet for whoever really wants one. Right? Again, I'm not telling you to want one. I'm just saying it's not out of reach. But when it gets to 100 grand or even 50 grand, that's out of reach for a lot of people. Right? When 100 grand, that's really out of reach for a lot of people. And once it hits $250,000 or $1 million, forget it. Like, most people are not going to put $250,000 onto a Bitcoin ever in their life, nor should they. Right? And I say that as someone who loves crypto and its impact on marketing and everything else. But to invest that kind of money, you need to have tremendous amounts of money to be confident enough to make that kind of investment, 5, 10 years from now, whenever it will be. And also remember that when it gets to higher prices, right, if you actually start trading in Satoshis on a day-to-day level, which is what people will be doing, nobody's going to walk around and say, hey man, you owe me 0.000000593454 Bitcoin. Just nobody's going to do that. They might today because the language is still in Bitcoin for those of us who are in it. But the overwhelming majority of the population on planet Earth will really never trade a Bitcoin in their life. Like, keep that in mind. It will never be a thing that you send somebody a whole Bitcoin. It just won't happen. That stopped happening already when Bitcoin hit $1,000, right? Before Bitcoin hit $1,000, I remember people used to send around, hey, here's a few dozen Bitcoin, here's 1,000 Bitcoin just for fun. Because they were worth nothing. They were worth 0.0 whatever dollars back in the early days. They were worth nothing. Now they're worth thousands of dollars. How many Bitcoins have you sent lately to people just for fun? Right? Like whole Bitcoins. So the price of these things go up. We have to stop talking in the day-to-day language that we communicate to customers in Bitcoin. We need to start speaking to people in Satoshis. Like, seriously, it's a big cultural thing. Nobody's going to want to earn 0.0001 Bitcoin a year in 10 years from now if it's worth $100 million or whatever, right? No one's going to earn that. I don't want 0.00 something of money for my salary, do you? Think about it as the average person here. No, they want to earn 100,000 Satoshi, 50,000 Satoshi, 1,000,000 Satoshi, whatever it's going to be worth in 10 years, right? That's the language. That's the thing you need to be putting in your marketing materials already now. Look at Blue Wallet. They're already using sats. And I said a long time ago, they're going to be using sats. Satoshis, they're going to be calling them sats. They're going to be calling them all kinds of funny things. Sats, it's already in your Blue Wallet right now, 2019. You can go and install it if you haven't already, just to check out the Lightning Network for fun. It is, awesome. Send some sats to people just for fun. Again, it's so cheap right now to send a sat. Who knows, in 10 years, one sat may be worth $1, right? If it ever gets to one sat is worth 1 cent, that's already $1 million Bitcoin. If it ever gets to where one Satoshi is $1, that is $100 million Bitcoin. And I assure you, if a Satoshi is worth $1, the average person ain't going to be sending around no Bitcoins. They're going to be sending around Satoshis, right? So that is why, as a marketer, we need to be using Satoshis as the language. Bitcoin is great. It's wonderful. It's amazing. And it gave us this thing called Satoshis, what it is made of. And that is what we actually need to be speaking of, right? You've got dollars and you've got cents. Now, we don't talk in cents because people don't earn cents because dollars are infinitely inflatable, all right? And nobody wants to earn point something of a dollar. They want to earn, oddly enough, they want to earn the whole dollar, obviously. But that's, again, if they'd started printing bills for pennies, right? If pennies had gone up and, if they hadn't, well, the problem is that they keep printing, right? Because they keep inflating the amount of dollars on the market by just printing more of them through the central banks and pennies, they go down in value, right? As opposed to going up in value with Bitcoin and Satoshis because those stay fixed and actually shrink as people lose them. Which, by the way, the losing thing, also let me remind you, brings into question, if you haven't tuned into this show before, you might know I talk about this sometimes, that there is a very limited shelf life to Bitcoin. Like, there just is. People talk about $100 million Bitcoin. I really think they're deluded. And here's why, right? We've already lost 25% of all available Bitcoin ever, period, end of story. What makes you think the other 75% aren't going to disappear in the next 50 years? People lose money. It's just a fact. That's one of the reasons, by the way, that the central bank prints more money. As evil as the central banks may be, I'm not going to say they're evil, but as evil as they may be, okay, hell, I'll say they're evil just for fun. As evil as the central banks are, one of the key functions they serve is to be able to create currency on a whim in case they need to. Now, obviously, they do it far more than they need to. And that's why money keeps devaluing. Yes, and it's built in that they can keep devaluing the dollar by a couple percent a year until it's worth nothing. That happens with every currency, by the way, right? With every fiat currency to date that has inflationary policies. But, right, when you lose money, fiat currency, right, at least, like if it burns or something, if it gets atomized in some massive explosion or something, and it's documented or provable, right, or it gets destroyed somehow, and it's provable, the bank can print new ones and issue them to you without affecting the circulating supply. Because let's say you lost 5 million, you put 5 million back in, the circulating supply stays the same, right? You don't have that in Bitcoin. A quarter of them are gone forever. It's only 10 years old. A quarter of them are gone forever. And by the way, many of them were lost not just in the first few years. Many of them have been lost just this past year. Right? Millions of them over the past 5 years since people knew that Bitcoin would be worth something, which it was already worth something. Millions of them have been lost since we already knew that it had value and people were exchanging it for money, for dollars on exchanges. Since then, millions have been lost. Now, if you lost it when it was worth 0.0007 cents, you can be forgiven for not having been ultra secure with your passwords and whatever. But if you lost them when they were already worth $100 or more, that means you're really losing real money on something. And it's not very encouraging for those who think that Bitcoin is going to live 100 years, 200 years, 300 years. I don't think it's possible for Bitcoin to live that long. I really don't. And I love Bitcoin. But I think, at best, we're looking at a 50-year to 70-year time frame at the absolute outset. Why? Because they haven't yet implemented, and I don't think they ever will, a very simple 7P plan that has been put out there, which basically allows for the replacement of lost crypto. If you can prove that crypto is lost or gone or idle or whatever, and it was there once and now it's gone or something, if there's some way to document that, it should be replaceable. And I mean Bitcoin and other cryptos that are not, that have fixed market caps, right? Or fixed circulating supplies and fixed supplies, max supplies. But until that happens, I think that those kind of cryptos run a risk of essentially disintegrating and disappearing into the ether, not the Ethereum, but the netherworld or whatever, the infinite. They're just going to disappear because people are just going to lose this money. Now, are they going to be less likely to lose it as it goes increasingly up in value? Yeah, but not 100%. And also, people don't secure them. So even if you don't lose your crypto, you might still get it stolen from you, and it might still go on, it might still fall off the radar. And, yeah, anyway, I don't want to dwell on that too much. I've said my piece about it. Keep your money secure. Right? Get a blockchain wallet. Definitely do that. Yeah. Now, there's this article here, which I thought is actually relevant to the whole development of the blockchain thing and also the internet. If you haven't heard about it, this article on Decrypt is one of the articles you can find about Wikipedia 3.0. One of the co-founders of Wikipedia, Larry Sanger, he co-founded Wikipedia in 2011. And he basically, worked as one of the guys who developed what is now the most popular encyclopedia on the planet. And it's essentially an open encyclopedia for anybody to contribute to. But here's the problem. It's only it's been around for 20 years just about, 18 years. And there's still only like 10, 20,000, there's not even 20,000, I think like 10 or 13,000 editors for all of Wikipedia. Imagine that. Like the most popular site on the planet for finding, rough ideas of what something is about. And it's only got like 13,000 people contributing to it. That's nothing. I mean, that's really nothing. It should have at least 100,000, if not millions of people contributing to it. And that's the idea of Everipedia. Everipedia is this new thing that Larry Sanger is getting into, is backing, and is starting, to put energy behind. Basically, Everipedia lets you document inside their website anything as long as you can cite it, right? It could be, it doesn't have to be some notability kind of citing. It can be pretty much anything. You can cite a web page that talks about one of its own other pages. You can cite, an independently published blog that isn't some fancy major media. You can cite, you can take a picture like the guy Larry Sanger. Like he cited it. He put in his own left thumb onto Everipedia. You don't need to be some celebrity. You don't need to be some Nobel Prize winner. You don't have to have billions of dollars or people following you by the tens of thousands. No, anyone can post pretty much anything, and it's much more open than Wikipedia. Now, a lot of people have said that it's not as good as Wikipedia and the facts aren't there and this and that. Let me remind you that when Wikipedia started, it was considered garbage, and by many people still is, because of its habit of allowing an amazing amount of mistakes to be published. You can't blame a startup for having imperfect content on their website when their content is built by open source community, right? That will obviously improve in time. So people that make that argument that Wikipedia is better and Everipedia is a place where just you go to find, not facts, like the Wikipedia of being wrong, they call it, as a joke. That's, it's unfair because Wikipedia was far worse, right, in many ways, than Everipedia is currently. Wikipedia has made some egregious mistakes, allowed editors to make some egregious mistakes that took some time to correct, but they did, eventually correct them, because that's what happens, right? It's an open source software environment. That's what happens. Open source publishing means people can publish whatever they want, and then someone's got to go in and fix that. Not everything can be fixed all the time, right? And not everything needs to be fixed all the time. That's the other thing. You should see information and take it with a grain of salt. If anything, I think Wikipedia, yes, you could argue it's a money play, that they're doing this to get more people mass adoption into their thing and to make money by announcing that it's going to be part of the blockchain, and that they reward writers, contributors with cryptocurrency that you can earn from the Everipedia. So everything you publish there, can get voted on or whatever, you can earn crypto for contributing, basically, which you can't do on Wikipedia. Wikipedia is kind of like the Facebook of encyclopedias. It's free to join, but they own all the content, even if you write it, right? That's crazy, but that's how it is. People accepted it because that was the way the internet was, right? And now Everipedia says, no. You can earn money by contributing content, which is actually much more fair, right? Why shouldn't you be able to earn money for the content you create? Why should you write content for free for Wikipedia? Like, seriously. There is a noble ambition with Wikipedia that cannot be denied, but the data bears out the facts. People obviously aren't into contributing content to Wikipedia. There's only 10 or 13,000 people on the planet that do it. I mean, that's ridiculous, right? Like, more people might watch a YouTube video than there are people interested in actually contributing to Wikipedia. So, keep that in mind. Be not a giver of all of your energy and resources. Remember that you're in it for yourself as well as for your loved ones and your friends and whatever else you're doing. But a little bit of selfishness when you're a marketer building a business is important. And the folks at Everipedia, I don't think they have a bad idea. Will they ever take over Wikipedia? I don't know. Isn't it possible that Wikipedia could just introduce their own cryptocurrency? Yeah. It is, and that'd be great. But they haven't, and this guy's taking the opportunity to say, you know what? I see an opportunity to build a business that's based on the same model of getting people to contribute content, but has a different reward model and uses a different solution and everything else. So I think actually Everipedia is pretty great. I've tried it. I like it. It's really cool. They have a neat, active community. You can see all kinds of weird and funny things on there. The content will clearly improve over time because that's what content does, right? That's what content sites do. Over time, they improve their content. So give them a look if you'd like to see how they're building a community. By the way, it's a very useful site if you're marketing anything to get a lot of references from and even to post relevant things about, because you can really post pretty much whatever you want there. Obviously, don't go on and there and spam everything, because that's what can kill a perfectly good website publisher, and it's not good. But if you're interested in publishing good, useful content that might enrich readers about your business or brand or product or whatever in an interesting way, and can even lead them to other rich media, because remember, you can post in every media just like you can in like a WordPress blog or a Medium. You can post images, graphics, videos, whatever you want. In that sense, it's easier to use than Wikipedia. And also, you don't have all that silly wiki code that you have to use and all these other incredibly arcane and ridiculous rules that they have on Wiki. None of that applies on Everipedia. You can just go and post what you like. It's much more fun and open. From a marketing perspective, they definitely understand mass adoption way better than Wikipedia in terms of getting people to contribute. Right now, they're still at the starting stages, and you can still argue, no, Wikipedia is still way bigger. Sure, it's bigger because it's been around for 20 years or 19 years, and Everipedia pretty much just started in 2017. But give it another 5, 10, 20 years. See where it's then. See where Wikipedia is then, right? If Wikipedia stays the way it is, I don't think anyone's going to use it in 20 years as a contributor, because it's just so arcane and clunky. Like, why would you use that thing? Even with their so-called, improved graphic editor, it's still horrible. I mean, it's just horrible. Like, whoever, wikis were great 20 years ago. They're not great now as technology. They're horrible now compared to what's out there. They're just horrible. They're not easier to use. They're not simpler. Like, nobody writes HTML if they're average web bloggers or average web users. They don't write HTML. That's for developers on the back end at this point, right? Most people use button-based interfaces. Give them that on Wikipedia. That's really what you should give them. And you should just let people type and talk and do whatever they want to enter the content and plug in videos and everything else. But they don't do that. They have some stodgy old rules. They're trying to be taken seriously, which is kind of ironic, because when Wikipedia started, nobody took them seriously, especially not the establishment. But now that the establishment has kind of made them the default website to show on Google SERPs, for when you look up something, since many years for a lot of different topics, it is the establishment full of mistakes and everything, right? Warts and all, it's part of the establishment. Yay, Wikipedia. But now there needs to be something else that's better and newer and more grassroots. And that thing, right, could very well be Everipedia or things like it. It could be Everipedia. It could be something else. Anyway, guys and girls, I want to thank you all again and remind you that on this wonderful day of trading in the markets, and we see businesses spending more on marketing and companies doing more in sales, and marketing campaigns growing more and more for different cryptocurrencies, whether you're into, I don't care, you're into Bitcoin, Cardano, Ethereum, XRP, Neo, Nano, whatever you're trading, Litecoin, I don't know what you're buying, EOS, anybody here into EOS? Whatever you're buying, whatever you're selling, remember, you get Satoshis, and you, and you, and you, and everybody gets Satoshis, right? It's a meme I saw on Reddit of the Oprah Winfrey, you get cars, or whatever, you get a car meme. This goes back to my discussion, right? And that's why it's I think even the thumb of this video, the thumbnail, because it's not about Bitcoin. We have to start marketing Satoshis to people. We have to start marketing the value of a Satoshi in 5 to 10 years, and that will be your currency. That will be your currency, right? That's what marketers who are into crypto and blockchain have to start doing with the Bitcoin. Other cryptos obviously don't use Satoshis, right? They're built on other things. But it's important for Bitcoin, and the reason I talk about it so much is because so far, Right? Whether you like Bitcoin or not, so far Bitcoin is the default cryptocurrency. And it will continue to be until it is not. Right? And how long that will be, I don't know. And you don't know. It could be 5 years, 10 years, 100, I don't know. But until it's no longer the default, and until people are talking about, something other than Bitcoin, as a cryptocurrency to be the global solution for everything, you need to learn about it. You need to understand and internalize and make your lingua franca about this space Satoshis. I don't mean for when you're investing, obviously. If you're still investing in Bitcoins and you're buying whole Bitcoins or even parts of Bitcoins, go right ahead. Buy your Bitcoins. I mean for when you're marketing your products and services to people, you need to communicate those prices in Satoshis. Right? You can communicate them in Bitcoin and next to that Satoshis, so you can show, oh, this car, it only costs point, like in the future, whenever Bitcoin reaches high numbers, this car only costs 0.0005 Satoshi, a Bitcoin. But then when they look at this, the sticker shock price will be when they read it in Satoshi and it says, yeah, this is 500,000 Satoshi car. And then they'll flip out or something, So fine, but they'll need to pay for it with Satoshis, right? They're not going to give you a whole Bitcoin for a car when it's worth $100 million for a Bitcoin. They're going to pay you in Satoshis, right? So start putting Satoshi prices on things so people can get used to it. And Bitcoin prices next to it so people can see they're the same. And one is a fraction of the other, but they're the same, right? And that they're familiar, so they can get familiar. Because again, when they earn money, they're not going to want to earn point something of a Bitcoin. And when they spend money, right? So they want to earn multiple Satoshis in whole numbers. And when they spend money, they're not going to want to spend, whatever it is, 10,000 Satoshis to go do their grocery shopping. They'd rather spend 0.0000000, whatever it is, 1 Bitcoin. Because it seems cheaper. So know how to use the language of Satoshis versus Bitcoins to buy and sell. It's to your advantage as a seller to sell something in fractions of a Bitcoin because it seems cheap. But to the buyer, they want to know that the value has the value of many somethings, so they can have the value of many Satoshis, right? So if somebody's earning something from you, give it to them in Satoshis. It's a psychological effect, but this makes a difference for businesses. You would be surprised. We are still at the infancy of this happening in the zeitgeist of Bitcoin and crypto, but it has already proven itself to be an effective method in other assets, okay? Anyway, I don't want to bury your brains on this wonderful Friday. We're having all this good trading happening. Everyone's excited about the markets, and I hope your businesses are flowing and selling like crazy, whatever you're selling, whatever you're marketing. I hope your KPIs are up and your business drivers are up and all of your goals are crushed and you've got new record highs to feast on every day of the year. And you do that, of course, by marketing better. And hopefully you can do that now by some of the marketing insights you've heard on this show. And if you have, well, by all means, let us know. Tell us what you think. We love the feedback. And yeah, like, subscribe, whatever. If you want to follow us, obviously it's for marketers. If you're not a marketer, don't bother because you're probably going to get bored here. Even if you watch this whole video, and I commend you for doing that, this really is a place for marketers to talk about marketing, and it's what I do. I talk about marketing. So, thanks again. Hope you all have a wonderful day, night, evening, morning, whatever time it is, wherever you are. Thank you, global internet. And just remember, folks, till then, take care.